Welcome back to another Q&A session with myself, Katy Eatenton, an independent mortgage advisor.
And Matt Baker, whole of market insurance broker.
So, got a good question for you today, Matt.
Go on then.
If I had a heart attack and I had critical illness cover and income protection, which policy would I claim on?
Good question. So you've got two policies in place there. Actually, it depends on the severity of the heart attack there, but you could potentially claim on two policies. The first one being that for serious illness cover, if you had a heart attack and it was severe and it fit within the parameters of the policy, it would pay out a tax-free lump sum amount. Again, if you were off work with that heart attack, so you had to take a fair bit of time off work to recover on medication, what have you, and the doctor signed you off work, the income protection would also pay out off the deferred period. So to answer your question, it depends on the severity of it, but potentially both policies would pay out.
And what's the deferred period?
So a deferred period is like having an excess in terms of how many days. Let's just say, for example, a deferred period could be 4 weeks, 8 weeks, or 13 weeks or beyond. So that means that you won't get the payment unless, until it falls on the 8th week or the 13th week, like I've mentioned. So it's having enough savings over that period of time to be able to cover that deferred period. Now, obviously, the longer the deferred period, the cheaper it becomes. So obviously, if you wanted no deferred period, so to pay out on day one, it's going to be more expensive than having a deferred period of 13 weeks or 6 months, if that makes sense.
Brilliant, thank you.
No worries. Hopefully that answers the question.